Looking at the market at this stage, in the low again or this week, how are you playing it at this stage?
Well, I would say there are a lot of factors that will influence it. We are actually going through a very high rate of what you'd call inflation. Inflation is actually at the highest level on one end. Then you have to look at the shilling that is taking quite a battering. There's very high demand for the shilling and it's actually losing out against the dollar. But then again, we also look at it going forward that it's also coinciding with the high tourism period, so we'll still have a lot of inflows in terms of dollars. We'll also have a lot of remittances by Kenyans has actually increased. But be that as it may, we look at it generally, it's not been a good time for the Kenyan economy, because also on the other hand, we have actually demand on power versus supply, where supply is less than the demand. So there's need for certain measures to be put into place to actually bridge the deficit. And generally as an economy, as it is, every economy, you normally have your highs, there's a boom. And right now what we're experiencing, even with the stock market, is actually a bear market, which is one of the most ideal times as an investor to look at viable opportunities to invest.
So now the shilling sitting at a 17-year low at around 92.90 against the dollar. Is this a good time to buy, or should one be holding at this stage?
Well, I would say looking at it, it's also a good time to buy what I would call value stocks, because what will happen is with the stock market actually going lower and lower, it's actually an opportune time to look at the value stocks, some of the blue chips that before would have been extremely on the higher end when the market was more or less bullish, are right now for the taking. And all one needs to do is to actually look at more of the fundamentals. You've seen Access Kenya coming into profitability. You notice that the data market is actually being more and more enticing. So you have the likes of Safaricom, still a viable share. Then you look at a few of other blue chips, like in the financial sector, you have your banking industry. You look at Coop Bank, posted very good results. So it would be one of the opportune times to sit back and reevaluate one's portfolio for the future, because as it is, a bear market will last for a duration, and from there you resume to a bullish market.
Looking at Access Kenya at this stage, out with results earlier today, net profit doubled to about 62 million shillings compared to about 31 million shillings in the same period last year. What did you make of these numbers?
Well, I would say one or two things has happened. They've actually looked back and done a few trimmings to reduce their expenses, or to reduce, then they had partnership with one company that was not bringing return on investment. And also that right now the market is moved to data, corporate internet and the likes, and every angle right now is looking at data. Now money is not being made in voice, it's actually in the data segment. And these are some of the companies. You have Access Kenya, you have Zuku that is in the market, we do have the Safaricom that is in the market, also currently trying out their 4G frequency. So we have a potential for growth, and Access Kenya is actually at that opportune moment to take advantage of the same. And this has also translated, as much as if you look at from the books, you notice the sales were not that drastic, but they've done a few things to reduce what is called the wage bill, and then also the debt portfolio has been reduced drastically. That is what is allowing them to actually operate favorably and hence return profits.
Things looking positive somewhat, but what is your outlook for the company going forward, given all these new entrants that we're seeing coming into the market?
I would say cautiously that it is a viable investment only as much as the management structure is in place. Because like you say, and I rightly agree, they're not the only players in the market. So they have to be innovative. They have to create a package that will entice consumers, will make consumers actually stick with them and actually increase their customer base. So they'll have to deal with issues of unreliability, drop down in connection. So those are some of the key areas that they'll have to, and value-added services, because if you look at some of their competitors, Zuku comes with a package, and some of these packages that are offered are what are going to entice would-be customers to stay, as opposed to looking at the competition. So if those are plans in place, then it would be. But medium, I would give it a medium to short to medium term type of stock to look at the moment.
Talking about the stock, it has been under pressure thus far this year, but we see it coming in quite positive today. What is your outlook on the stock? Some respite coming through?
Well, notice that actually the return on the stock today was actually about 6 shillings 55, has more to do with also the sentiment. They announced their results, most of the investors were actually pleased. So there's that minute trading that is normally stoked by the results, and most people will go, most likely is normally pushed by the retail investors. But going forward is this is a stock, if you look at it from the previous, it's actually not been that of a top performer. So it would be something that one would hold on. Hence, my sentiments that is a short-term kind of stock to look at, and one would need to actually reevaluate if they're to hold a substantive shareholding in Access Kenya.
Now looking at British American investment, the IPO closed today. The company expected it to be oversubscribed. Was it oversubscribed?
Yes. Well, I would say at the time of closing, the results are not yet out, so I'd not be in a position to actually give that information. But be that as it may, from the kind of marketing that they went around, from its historical value, from its brand value, and from also being one of the largest insurers in the country, and having in regards to their portfolio and how they've been and how they marketed themselves, I would likely say that if not oversubscribed, but they've managed to meet the target that they had intended from the beginning, because it is a viable investment, and anyone would, it would be foolhardy not to have taken up that chance to invest in such a company.